Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Everyone, my name is Rob Clayton and thank you for joining me. Presently, the Australian dollar holds above the 69-cent handle and just above the key area of 68.75, which could draw demand. As markets digest the June 16-17 FOMC minutes, which reinforce the Federal Reserve's cautious stance on inflation and willingness to tighten policy further if price pressures fail to ease. Several policymakers supported additional tightening, with inflation risks remaining tilted to the upside. Fresh US strikes on Iran infrastructure raised concerns the conflict could drag on further, keeping oil prices elevated and supporting safe haven demand for the US dollar. Back home, RBA Assistant Governor Sarah Hunter kept the possibility of further rate hikes alive, although softer Australian inflation data has recently reduced expectations for additional tightening. Turning to the technicals, we are mixed, and therefore, while still capped around this top side of 69.65 to 70 cents, we're still playing in this range with support seen around 68.75. Looking at the euro, the market is attempting to try and pick up again, but looking at the resistance, still capped around 115, figure 15. Do take note that any pullback around that 113.40.50 should find demand. Well, dollar yen, little to say, but still trading very cautiously above 162 as there is still risk of a possible intervention. But the Bank of Japan has made note that they will not warn about intervention and keep it more to the quiet side. Keep an eye on this top side. If we do see a break above 162, 60.85, it could be very volatile if the market is short. But I feel one of these candles that we just recently seen, along with that, this candle here back in April, May, could return and keep the focus towards the downside around 160.5. Sterling, well, it's still displaying a stellar performance. And as you can see, looking up towards the resistance now, 134.65. Looking at the current pattern, though, I will be a little bit cautious just in case this turns into divergence. And if so, the bearishness could see a pullback towards 133. Gold, while the market's still contained by this resistant line, seen somewhere around 4,135. And while intact, could see a pullback to 4,075 to 80. But if we do see a break above this trend line, it could trigger a 250-point rally. Finishing up with oil, a little bit of profit taking coming back in, but I still feel the risk could see a further up test and looking towards a target somewhere around $78 to $80 a barrel if this pattern continues. But it all depends on how the tension in the Middle East, if it continues to escalate or eases. Well, that's a wrap. Thank you for joining me. And as always, look out for the interest report. I hope you had a great start to the day.